Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TREX CO INC quarterly report. TREX Co Inc. offers a wide range of businesses and services including composite decking and railing products, decking accessories for protection against fading, staining, mold, and scratching, outdoor lighting systems, TREX deck lighting, railing products, e.g. TREX Signature X Series railing, TREX Transcend railing, fencing products, e.g. TREX Seclusions, licensing agreements with third parties to manufacture and sell products under the TREX name, manufacturing of outdoor furniture, TREX Outdoor Furniture, above joist deck drainage systems, TREX Rain Escape, protective tapes for wooden deck framing / substructure elements, TREX Protect Joist, beam and rim tape, plug-and-play LED soffit lights, TREX Rain Escape soffit light, butyl flashing tapes with aluminum liners, TREX Seal Ledger flashing tape, pergolas made from low-maintenance cellular PVC and all-aluminum products, TREX Pergola, lattice outdoor boards, TREX Lattice, cornhole boards, TREX Cornhole boards, specialty saw blades for wood alternative composite decking, TREX Blade, spiral stairs, TREX Spiral Stairs, outdoor kitchen cabinetry, TREX Outdoor Kitchen. These products are sold through various channels, including wholesale distributors, retail lumber dealers, and Home Depot and Lowe's stores. TREX CO Inc.'s stock price has crashed by over -54.88% in the past year due to a combination of factors. The company's disappointing third quarter 2025 earnings report, released on November 4, 2025, was a major contributor to this decline. Key issues included missed revenue and earnings expectations, weakened full-year guidance, and challenging market conditions that led to lower than anticipated sales. CEO Brian Fairbanks attributed the slowdown in consumer demand for decking and railing products after July to weaker market conditions experienced over the past 2 years. Additionally, TREX's distribution partners are expected to reduce their inventory levels through the end of the year, further impacting sales. Analyst downgrades and reduced price targets also played a significant role in the stock's decline. The company's failure to meet expectations, coupled with a cautious outlook for the remainder of the year, has led to a sharp drop in its stock price from $80.74 to $32.14. The substantial decline is a result of these interconnected factors, which have collectively contributed to TREX Co Inc.'s significant stock price depreciation. The primary drivers of revenue growth or decline can be summarized into several key factors. On the growth side, an increase in volume, market acceptance of new products, and seasonal consumer demand have contributed to revenue increases. Additionally, incentive programs and sales made to foreign distributors have also boosted revenue. On the other hand, warranty claims, surface flaking claims, and seasonal fluctuations in home improvement activity have led to revenue declines. General economic conditions, increasing inflation and tariffs, competition in the markets, and cyberattacks have also negatively impacted revenue. Net income and profit margins experienced shifts in recent periods. The net income of the company underwent contrasting changes between the 3-month and 9-month periods ended September 30. In the 3 months, it increased from $40.55 million in 2024 to $51.77 million in 2025, while the net income margin rose from 17.3% to 18.1%. However, for the 9 months, the net income decreased from $216.62 million in 2024 to $188.11 million in 2025, accompanied by a decline in net income margin from 22% to 18.6%. The reasons behind these variations are attributed to specific factors. The decrease in net income and profit margins for the 9 months can be linked to excess tax expenses resulting from stock-based awards and reduced allowable deductions for foreign-derived intangible income. Additionally, inefficiencies associated with startup costs led to a decline in gross margin during this period. The company's financial performance indicates a positive trend in its operating cash flow, with net cash provided by operating activities amounting to $292,627 for the 9 months ended September 30, 2025. It is clear that the company is generating sufficient cash from its core operations. This increase of $140.2 million in cash provided by operating activities further reinforces this positive outlook, suggesting a strong financial foundation for the company's continued growth and success. The company's debt level has undergone a significant change in the past year. Initially, it decreased by $64,160 from December 31, 2024 to September 30, 2025. However, as of September 30, 2025, the company had $111.3 million in borrowings outstanding under its revolving credit facility. This indicates a substantial increase in debt level despite the initial decrease. Regarding interest expenses, there has been a notable change due to tiered pricing based on consolidated debt to consolidated EBITDA ratio for revolving B loans. The cash paid for interest was $0 both years, but financing costs were $6 in 2025 compared to $0 in 2024. This suggests that the company's interest expenses have increased significantly, likely due to changes in its debt structure and pricing terms. Management's outlook on company strategy management is cautiously optimistic about the company's outlook, citing consumer spending and preferences as key factors that will impact results. Despite this uncertainty, they expect to optimize performance and financial results through a focus on one reportable segment. The company is also prioritizing internal growth opportunities, with capital expenditure guidance for 2025 set at $210–220 million. This investment will be focused on the Arkansas facility, supporting future growth and development. Seasonal weather conditions may affect sales, but management expects to fund future capital requirements through a combination of operations and financing activities. Overall, management is positioning the company for long-term success by prioritizing internal growth and optimizing financial performance. The company has implemented a stock repurchase program, allowing it to buy back shares from the market. Specifically, they have adopted a plan to purchase up to 10.8 million shares since its inception in 2023. However, there is an instance where no shares were repurchased during a 9-month period, indicating that share buybacks are not always active. Concerns about inventory buildup and supply chain disruption. The company faces concerns regarding inventory buildup and supply chain disruption. The decrease in LIFO inventory valuation from $34.118 million suggests that the company may have overstocked, which could negatively impact future sales if demand does not increase accordingly. Furthermore, there are also concerns about supply chain disruptions, including factors such as availability and cost of third-party transportation services for products and raw materials. While tariffs are expected to have a minimal impact on cost of sales, these potential disruptions highlight the need for careful management of the company's supply chain to mitigate risks. That concludes the financial summary for TREX CO INC. Feel free to comment below, and I will be happy to answer them when possible.